Market news now. Asian stocks made modest gains on Wednesday. This after a batch of generally solid U.S. earnings and news of China's stimulus plans helped to drive up markets. Beijing announced yesterday that it would move to a looser fiscal policy as it seeks to protect China from the impact of an escalating trade row with Washington. Japanese shares were up, with the Nikkei share average registering a 0.5% increase. Hong Kong stocks rose the most, with the Hang Seng Index jumping 1%. Despite the positive news of fiscal stimulus by the Chinese government, Chinese stocks fell by 0.1%. Over in the United States, U.S. stocks hit their highest level since the beginning of February. This as Google parent Alphabet's blowout results bolstered expectations of a robust earnings season. The Dow Jones Industrial Average rose by 0.8%. The S&P 500 gained 0.5% as well, and the Nasdaq Composite Index closed down 0.01%. Well, global markets are looking mixed today, but the local all-share index is very much in the red for now. There's good news on the local currency front, though, as it appears to be firming relative to key currencies. Let's take a quick look at the indicators. Well, to speak further on what's happening on local and global markets, and with a bit more of a focus on BRICS markets, I'm joined by Makwe Masilela. He's the Chief Investment Officer of Makwe Fund Managers. Thanks for joining us, sir, as always.
Pleasure.
Good stuff. So let's start with the broad-based picture today. What's happening with global markets? They seem to be rather mixed. On the one hand, we're hearing that the United States hit the highest level since February. That February was the time, of course, at the beginning of that month, where things just went wobbly and there was a massive correction in global markets. What's happening in terms of markets broadly, and what are the main drivers?
You know, markets broadly, including the European markets, were a bit down, you know, and I think with us, you check the basic resources are down, and mainly at the back of the comments that came out of Donald Trump, you know. I mean, ahead of the meeting with the European Commission president, I mean, for him to double down, you know, on the efficacy of tariffs, and the guy is telling us, you know what, we are happy, people are now talking because of what we have started. And I think to some extent the markets can deal with the 34 to 50 billion tariff, but what we don't know is if the guy has to go ahead and start imposing tariffs on these European cars, because obviously Europe as well will try maybe to retaliate on that front. So I think that gives the market a bit of a worry, you know, when it comes to that. But China as well helped, you know, with the good news that, hey, we are happy to put in more money, infrastructure spending. And we know 2007, 2008, the guys came with a sledgehammer, but this car might come with a bit of a chisel, you know, meaning get more focused on what they need to do to boost the economic growth.
And then what's happening with the oil price, which is always an interest for South Africans as we're a net importer of oil?
Unfortunately, you know, the worries that we had about the oversupply are no longer there, because we've seen the inventories coming out of the US. They fell more than expected. And the fact that China might come with some infrastructure spending, that tells you that there might be some demand coming out of that side, and it's making oil prices, Brent crude, to flate with almost $74 a barrel. So that's a good boost for oil prices.
So, of course, we know that come August, we're going to get another petrol price hike. If the oil price continues on an upward trajectory, even though we see that the local currency is firming somewhat, it could mean that we get another increase in September as well. By
all means, and we know that's inflationary in its nature, and we know already people are marching out of there. No one is happy with the whole story, but yes, for me, the biggest concern is inflation, and we know what happens when the minute to start getting inflation, the Reserve Bank, they will have to act.
So, of course, South Africa is hosting this BRICS summit, the 10th BRICS summit, and already people have started flashing cash at us, that is at South Africa. The Chinese government pledging $14.7 billion, and that's over and above what other countries have pledged to South Africa. Of course, President Cyril Ramaphosa is looking for $100 billion to raise over the next 5 years. The record so far is looking quite good, although the details are a bit not very clear.
Not very clear, and I think that's what you need basically. You know, you don't as much as we like to attract money, this whole thing of getting the hot money, people buying stocks, bonds, then they get some funny irritation, then they sell by the click of the button. You know, stuff like, you know, foreign direct investment, because people cannot just decide overnight and pack their bags if they've invested in a factory.
Indeed. And then let's take a look at the Chinese markets. I mean, they're the biggest. Obviously, China is the biggest country in the BRICS grouping. I think its economy accounts for about 60 or 70% of the grouping. Very significant. When you look at the Chinese market, is it a closed market? Is it a market that South Africans and anybody else can invest in? And how does that market look currently?
Very close, and even when it comes to ownership of banks, stockbrokers, that side is very closed. It's now lately that China is trying to open up, and unfortunately their market is not a clear reflection of the economy. So hence we usually say, you know, if you've got issues with their market, which is now busy in the territory of being a bear market, given what their peaks this year, because they've not been doing well, and mainly at the back of, since this whole story of the trade tension started, or the trade wars as it is now, the market unfortunately managed to be hammered. Fortunately, they were trying to get a little bit of a boost when it comes to their currency, because we have seen the Chinese yuan has been going down. But yes, it's a market which is not open to foreign investors. It's only now that they're starting to open up.
And of course, it's not much of a benefit for them if the Chinese yuan is depreciating, but all the stuff that they're exporting is getting clobbered with import tariffs.
Exactly, and in a way it can work for them, because we're talking about more of a currency war, because for you to do value a currency, then it makes your exports very competitive when it gets offshore.
And then Brazil, we know that it experienced somewhat of a recession. It experienced a recession, and on top of that, there was a lot of political upheaval. The president that is now in prison. How's that particular stock market doing?
Doing okay, because I think they reached their highs around February 2018, and I think for them to be able to get out of recession, it was their soya beans that they used to export, what was a good story, and the guys managed to survive, you know, given that we also had the truck strike that side. But I think their currency is the one which is in trouble, you know, in line with the Turkish lira. It's not just been doing okay, but the market so far has been holding okay, given that the guys were in a recession for almost 2 years.
Well, there are 5 countries in the BRICS grouping, and we only get 5 minutes to chat, so we can't cover all of them. Thank you very much for your time, Makwe. That was Makwe Masilela. He's a fund manager at Makwe Fund Managers. After a short break, more news for you.